What's going on, guys? Welcome back to the channel. I'll be starting this video with a long bias on this 1 minute time frame. As usual, we will be looking for a few things on the chart. First, we want to see a clear trend. This will help us to identify which direction the market is moving in. Second, we want to identify a key level that we can target. Doing so will obviously enable us to establish our profit targets. We also want to see a good risk to reward ratio. This will help us to minimize our risk while still giving us the opportunity to make a profit. And as I've said before, guys, if you want to simplify your trading process, get rid of any discretionary decision making and develop a system you can have full confidence in every time. That will make, I think, a big difference in your P&L. All right, so starting with this section of the chart down here, we see the formation of this nice consolidation phase followed by a 30-point surge. After that, there is a period of fluctuation and a breakdown, as you can see in the chart, to the downside. The market then goes through a reversal move, balancing first this inefficiency zone to then bounce off of the 40-50 level. We can also see here how the exhaustion of supply side becomes evident via these large demand spreads and price retracing 50% higher into our range, fueled by these breaks of market structure. After that, the market does an head and shoulders and flips bearish. Now, this area over here, which becomes obviously our point of interest, will be crucial to pay attention to, as it should give us more insight into the market's short-term behavior. What I mean by that is that if the price retests and shifts upwards here, it could have some room to run. On the other hand, if we break this equal low and move below these already balanced zones, which in combination with the top of this consolidation area, create, I think, a decent base for the price. So if we break below any of these levels, then the trade is void. Now, some of you might argue, why not then take a short here undercurrent? Well, the simple answer is that it's simply a guess and not a confirmation. In terms of my long bias, looking at this 5-minute chart, it's highly probable, in my opinion, that the market will retrace higher rather than puke lower, given that this particular range has no imbalances to correct. And what that means is that the bearish sentiment could start to dissipate in anticipation of a bullish reversal. In other words, supply and demand dynamics, which as we know can have a big impact on price, seem to suggest that our range is currently in a temporary equilibrium. With the market apparently having reached a natural pause, I'm hoping that we will soon see confirmation of bullish trading action picking up and pushing prices back in a more positive direction. This confluence of factors was a good enough reason, in my view, to satisfy a long entry. And again here, guys, I do believe that understanding the context and motives behind the chart's price action is everything when it comes to day trading.
Order filled. Target filled.
All right, I guess we are done with the trade, so let's go ahead and move on to the next one. So after analyzing the charts, I decided that going long on this particular trade was the best option. Within this 1 minute time frame, it's evident that the momentum has shifted from bearish to bullish, as shown by the price bouncing off of the 39.15 level. The bounce via this liquidity grab and descending channel also validates the bottom of this 35-point range, as price starts to push up above previous day's low. We also have price closing inefficiencies and breaking structure as it continues repricing higher. Now, if you have been day trading for a while, I'm sure you know that the key to profiting from short-term price movements is spotting when structure breaks. This means recognizing when the market departs from its typical cycle or pattern and enters a period of higher volatility, which often precedes a larger upswing. I think that by keeping an eye out for these technical elements, we as day traders can quickly position ourselves for some green during price run-ups. So there is no denying that these important structural elements, including price breaking through this order block, which, as you can see in the chart, also marks this resistance level over here. These structural elements are, in my view, about to set off a chain of technical reactions which could result in even higher prices and possibly a breakout. Obviously, this price action scenario is within my trading style and presents me with an opportunity to capitalize on it, which is why I placed my entry at the bottom of this imbalanced area, waiting for a fill on a pullback.
Order filled. Target filled.
Alright guys, so that should do it for today. Thanks for watching, and as always, good luck with your trading, and if you liked the video, please like and subscribe to the channel. I'd really appreciate it. Thanks again, and hope to see you in the next one.